you. Good morning, everybody, and welcome to today's AFP webinar on demystifying insurance. Insurance is that subject that actually has become a really relevant issue within the AFP, and from our AFP membership base, we're picking up a lot of noise moving forward in terms of insurance, cost of insurance, and the purpose of this webinar this morning is to hopefully demystify and have some conversation in terms of the subject, and where as fleet operators we can help influence the changes in terms of what we're seeing. What we are seeing from our membership group tends to be that year on year, and lots of operators are seeing significant increases in premium or insurance costs ranging from between 20, 25 to 30%. Each year. So the purpose of this today is, as I say, to try and expand that aspect further along. I'd like to start with some introductions, really, from my point, Carolina. So just a way of introduction to me, Peter Milchard. I'm a AFP board member. I'm also a trainer within the AFP Academy. I have a day job. My day job historically was managing vehicle fleets. I've spent a lot of time in the insurance sector, and my current role is head of motor risk at Howden Group, and Howden Group isn't the kitchen company, for those just to clarify that. It's one of the largest insurance brokers within the UK, and so really from our point, it's great for me to say that we've got great representation today. So I'll ask everyone to give a very brief introduction shortly after this, but I have Phil and Steve joining us from Zurich Insurance. I have Poonam joining us from AXA XL. I have Richard Parker joining us from Webfleet, who's going to talk a little bit in terms of technology and where that fits into the picture as to the future and the focus with insurance. I'm also grateful to have the company today of James from Miele, Stewart Lightbody from Sureserve, and Lee Jackson as NG Bailey. All three of those obviously very competent and well-known fleet managers. And I think the important part of what the outcomes and the objectives, and we move on to the objectives actually, but what we're actually looking for is to see in the real world what that situation is. Carolina, is it possible to just put up the objectives quickly? What we're looking at, four-prong approach here, really, from that point. We want to understand what's driving the increases in premiums, how the insurers assess the risk, and what operators can do to influence that positively. The role of telematics, vehicle technology, data, driver behaviour in ideally lowering insurance costs, and also some tips in terms of some quick wins about negotiating better terms with insurers and brokers. So that's what the format will be. What we're going to do is mainly a discussion point with a Q&A at the end, so please feel free to drop into the chat any questions that you'd like. Conscious of time, it's going to be a really exciting subject. It's a lot of people's concerns, so we'll see from an appetite we might have to extend to further points. From an AFP point of view, I think it's really important we focus on insurance and risk, and what you'll see for the AFP is we'll be gathering a lot more momentum in that area. So just very quickly, just going back, sorry, to the introductions, if I wouldn't mind starting with Phil from Zurich, if you wouldn't mind just giving a brief introduction to yourself, please.
Hello there. Yeah, Phil Ball. I've worked for Zurich, have worked for Zurich stroke Eagle Star since 1987, so I'll let you do the maths, but I've been around a while. I've worked in various locations in the Midlands and now find myself working for Zurich in London.
Excellent, thank you. And on the Zurich theme, Steve?
I am Steve H. I work for Zurich Resilient Solutions, and I've worked across the insurance industry for 40 years in various capacities, usually motor fleet underwriter, work for a broker, so motor broking, and also for claims and risk managing for motor fleets.
Fantastic. Poonam?
Yes, I work for AXA XL currently at the moment as a motor risk consultant. I have been in the sector for the last 15 years. Predominantly, I was on the client side in a fleet for 10 years.
Perfect.
Lovely to meet you all.
Thank you. Richard.
Morning, everybody. Richard Parker. The majority of my fleet career for the last 25 years was in the leasing sector, working for one of the well-known leasing companies, but last 5 years been working in the telematics industry. My current role, which I've now held for 2 years, is a transport decarbonisation consultant. And as such, in supporting the AFP, I'm on the decarbonisation committee, helping fleets try and navigate the challenging landscape that we've got ahead from that perspective.
Okay, thank you. Excellent. James.
Morning all. So James Walkington. I look after the fleet at Miele. So we've got just shy of 200 vehicles across LCVs and company cars. Only done 2 and a bit years now in fleet, but been with Miele for 21 and a half years. And so I'm a newbie to the fleet world still. But, it's nice to get involved in these sort of things. So thank you.
Yeah, no problems, no problems. Stewart.
Morning, everyone. Stewart Lightbody, head of Group Fleet over at Sureserve. So we run a fairly standard fleet, I suppose, 100 cars, about 3,000 light commercial vehicles, operating in the social housing sector.
Great stuff. And finally, but not least, Lee.
Yeah, sorry, issues with my lap. Keeps unmuting. Oh dear. You might need to take control, Peter, and unmute me as and when.
I can't control Lee.
You can't control. No, Lee Jackson, fleet manager for NG Bailey, also a board director and neighbour to Steve Vachre. I was going to go and sit with him this morning, but I had to travel to Leeds. So, Steve, maybe next time.
Like I say, considering your technology issues, you definitely would have been better sat next to me.
Definitely.
Yeah, I think before we well, on that basis there as well, really, I think, we have all got common things, common themes of what we're challenging with. And actually, it's like the irony how close that our industry sector is. And the fact of actually arranging this webinar, we identified that 2 of our members are literally almost in the same street as each other, I think. So, so world domination in terms of the fleet arena. So really coming to the demystifying, what a title, hey? Demystifying motor and insurance. I think I'm really going to start with Phil here, putting you on the spot really here, because from a lot of operators' point of view, whether they may or may not understand how you think or how you are the nasty people that charge these premiums on the fleets, so maybe just a little bit of an insight into the world of Phil and motor underwriting, really.
So you're putting the bad guy on first then, Peter?
Not necessarily, no.
Well, I guess probably over the 35 plus years that I've been involved in underwriting, I've been trying to demystify it, and hopefully what I talk about today will give most of you some insight into what an underwriter is all about. I will say that someone did once ask me why I chose to become an underwriter, and my response was, well, it sounded slightly more glamorous than being an undertaker. So what's the role of an underwriter? Well, my job is about selecting risk on behalf of Zurich. And an underwriter needs to be selective. We get to see a lot of quotes coming from the market and from all the brokers that we deal with. Not all are good. So the trick really is, from my perspective, is to be selective, try and work with the customers that we think are aligned to what we want to do and the direction we want to go in, and ultimately, hopefully, make a return on the premium that's paid. So it's around selecting risk. It's around pricing the risk and applying any terms and conditions that I deem to be necessary. Historically, motor's not been a profitable line of insurance business. The margins have always been very tight, and if you look at the results nationally, more years than not, the industry doesn't make a return on the motor account. It's very aggressive, it's very competitive, and there's never any time for you to take your eye off the ball, because you'll be undone by the competitors in the market. Ironically, in all the years that I've been doing motor fleet insurance, third-party claims and costs, which were always the biggest challenge, no longer are. And I think you can put a lot of credit for that down to Jack Straw when he introduced the whiplash reforms a few years back and took a lot of heat out of claims from a soft tissue sort of area. And now really what we're seeing and what we're trying to fight is the increasing costs fixing bent metal, own damage costs. That's where all of the real pressure is on our account. We've got pressures on third party, particularly on the large and catastrophic losses, but the days of everybody claiming a whiplash claim when they were bumped in the back at 2 miles an hour have pretty much gone, which has helped us enormously. So own damage is the challenge for us at the moment. So that's customers that choose to buy comprehensive insurance rather than third-party own insurance, which tends to be the much larger fleet operators. Factors that are driving claims inflation, and I'll try not to make this too much of a sob story from an underwriting point of view, would be advancements in technology. Repairs are more complex. Vehicles have got a lot more sensors on there and equipment. Even the windscreen claim these days is significantly more than it ever used to be, what with all the sensors that are installed in glass. Rising costs of raw materials and energy have been a challenge for us. Car parts, paint, labour have all gone up in recent years. And the costs associated with importing raw materials spiraled as well post Brexit. So that brought a big challenge to the motor insurance industry. Labour market demands are also an issue, and there's a shortage of skilled labour out there. Again, Brexit was partly involved in that. The repair market's generally quite an aged labour market, and it's difficult to get youngsters to be recruited. So again, puts more pressure on the cost of wages and labour force. Supply chains have been a challenge. Modern vehicle manufacturers generally import parts from all around the world, and then the vehicles are assembled on site. And obviously there've been supply chain issues with all the various situations that are going around in the world. Things like the Ukraine-Russia conflict, the Red Sea problems, Brexit. Now we've got Israel and Hamas. We're probably going to have Israel and Iran very, very soon. Well, it started really, hasn't it? So again, just putting delays into the time that it takes to fix a vehicle, because you've got to get the parts to the garage to get it fixed. Electric vehicles are an issue for us, a good issue in a lot of ways. We support customers who want to be sustainable, but electric vehicles are more expensive to fix and they're more prone to being written off. So again, puts more pressure on us. Repair costs over the last 2 years on EVs are about 25% more than what you would get on a normal vehicle, or an ICE vehicle, I should say. Credit hire, now they really are the bad guys. They're the guys that once you have an accident, a fault accident, and the third party gets into a hire vehicle, that's when the cost of a claim can absolutely escalate out of control. That's why it's really, really important that we are told about claims as soon as possible, so that we can manage the cost of the claim from the very start, and hopefully avoid the third party getting into a credit hire vehicle. Next point was large loss inflation. Large claims are getting larger. That's down to increased life expectancies and increased medical treatment costs. So, people are living longer, cost of care is a lot more expensive. It means that what we would deem probably a catastrophic claim is now significantly more than it was years ago, and we're talking millions and millions of pounds. Claims can now be 10 to 20 million pounds for somebody who's really badly injured with long-term care needs. Thefts have been an issue. We all know about the Land Rover JLR issue with the keyless fobs, and it's cost the insurance industry a lot of money. And fraud's a problem. At Zurich, we're really hot on fraud, and we look for red flags on claims to detect if we think there's any sign of any fraud going on, and we defend those rigorously. So those are the sort of challenges that we've seen in recent times. So what's an underwriter looking for? Well, there's a lot of variables on every fleet, but a good fleet for me would be low claims costs, common sense, low claims frequency, a customer probably that's prepared to take a higher retention, i.e. have a higher excess, so they're prepared to share the pain when something goes wrong. And particularly on, where appropriate, on the larger fleets, a customer that wants to engage with their insurers and partner with us and talk to us, and we learn from our customers and hopefully they learn from us. We'd be looking for a customer that's selective on driver recruitment. It's got a robust risk management approach, and ownership of risk within their organisation pretty much escalates up to board level, so there's buy-in at the top. That's the sort of customers we're looking to work with. I then thought I'd just talk a little bit about how we price a fleet. Pricing tools these days are actuarial tools, far more complex than what they used to be. Really clever, to be fair. I would say a customer's probably got influence over about 60% of the premium that they will pay. So, probably 40% is fixed costs and contribution to levies and taxes and catastrophic claims across the book. But 60% of the premium the customer will have influence over. Nobody's ever going to have no claims ever. We accept that, but that's the sort of area that customers should be focusing on, and we should be working with them and our risk engineering colleagues to try and keep premiums down as best we can. The other things that influence a premium will be the cover, comprehensive, third-party fire and theft, or third-party only, the types of vehicles, and the use of the vehicles. Fleet insurance historically is priced over the last 5 years' claims experience. Obviously, COVID put a bit of a spanner in the works on that, and we're still seeing, we're seeing fleets with 5 years' claims experience, and 2020 and 2021 stand out a mile, completely out of sync with what we would expect to see, going forwards. What we did see during the COVID years was a spike in big injury claims, and that was where more people were out walking the streets and out on their bikes, and they were getting hit and run over and knocked off their cycles, and across the industry we did see a spike there. So how do we price a risk? This is pretty much where the underwriter gets out his crystal ball and tries to work out what he thinks he's going to need for next year. So he's looking for trends, he's looking for improving trends. We'd split the claim costs down between own damage, fire and theft, and third party. We'd inflate the claims experience in previous years to bring it into line with today's money. We would then factor in something for large and catastrophic claims. So every vehicle that we insure pays a contribution to the pot for the few really big claims that we get. So, the principle there is that the many pay for the few. We charge to handle claims. So the less claims you have, the less claims handling costs you're going to incur. We'll build in a commission or a fee for the broker, hopefully not both. Expenses, which are our expenses to run our business, taxes and levies, which would be things like the MIB levy that every insurer has to pay to cover uninsured drivers or untraced drivers. There's an element of reinsurance costs. There'll be some return on investment. That's money we're sitting on waiting to pay claims, where we'll factor that off the premium. And then obviously we're going to try and build in a small element of profit for ourselves. And then on top of that, you're really looking at, on top of that, you're going to pay 12% insurance premium tax. That's compulsory, you can't get out of that. So the bigger your premium, the more tax you pay. So more incentive to try and keep your premium down. So that's kind of how we calculate a fleet premium. In terms of what's the role of the broker, well, really, very quickly, that is to furnish the underwriter with as much information about a risk and a customer as possible. An underwriter always likes a good story. The more information you give him and the better story you give him around the direction of the journey that you're travelling on, is going to make him more keen to add that account to his portfolio. In terms of what's the role of the insured, well, that's definitely to furnish the broker with as much insight into the risk and their business as possible. So vehicle details, vehicle usage, driver details, claims procedures, post-accident procedures, and risk management initiatives. And that's really where I want to kind of pass over to my colleague Steve, so that he can start to talk about risk management and what Zurich's position is on that area.
And just before we do hand over to Steve, is it so when I look at stats and things and what you're saying, and thank you very much for that. That's so powerful in terms of getting to people to understand. And even from a lay person point of view, we're in the AFP, we all do operate vehicle fleets, so we don't just do it for the fun of it. It's an essential service in terms of people going out. I don't believe that anyone gets up in the morning and thinks I fancy crashing, but what we're looking at, what we're seeing here is that your costs are contributed to how you're performing on operating your vehicle fleet, as in crashes, and when you do have them, mitigating that. So just in terms of, just before we move on to the risk management part, because that's obviously massively powerful, is it fair to say, when I look at stats, so Association of British Insurers stats that occasionally some of us look at, judge me how you want from that point, but it seems to be that for every £1 of premium on motor fleet that is paid in, insurers tend to be paying out more than the £1. So you wouldn't have that as a business model normally, would you? So I think that's a reflection of people do understand it's a legal requirement to have motor insurance, as we all know, and the challenge seems to be there that everyone's in business for reasons, and if you was to set up a business, it probably wouldn't be the biggest business you would set up, is it, if you're paying out more than you generate in income? So it's just an observation. Probably bringing Steve and Poonam in here, really, there, that surely the influence is to try and get the driver to not crash the vehicle as much as they possibly can do. So it'd be interesting to see from an underwriting, we're quite clear there that there's a lot of cost and there's a lot of frequency. So you're obviously the good guys here. So how does it happen? How can we stop people crashing them or not costing the fleet so much?
I think you've got an interesting point. So hopefully, I've worked with at least 5 of you in my different capacities as either insurance, fleet underwriter, broker, or risk management, or insurtech person as well. So hopefully I won't upset too many people here, but the observations are quite often a broker will, when they're touting for some new business, say to a client, come to us and we'll save you insurance on your, premium. And that's not quite the case, as Phil said. Costs are going in one direction. The fleet market has lost money year on year, and there's inflationary costs and that. So I think what you should do is, rather than you focus on the premium to start off with, you start to look at where the issues are. And this is where myself and Poonam come in. Every client receives data, they have the claims data, they know where their issues are, and you start to analyse that. And first of all, you'd be probably reactive would be the best way to do it. So you're having accidents, it's how you control those costs. And those costs can be controlled through a good FNOL, first notification of loss process. If you get that right, if it's accurate and speedy, research has proved that you can almost reduce third-party costs by as many as 40%. Now, if you think about it, if you get that bit right, then Phil and the other underwriters are instantly going to be happy. And quite often, this will go to your bottom line as well. You're paying out excesses, and if you can reduce those costs. So once you become reactive, then you start to become more proactive. And again, this is where the likes of Phil and technology come in. Zurich and AXA XL can do risk management programs. We can help bring improvements. But these have got to be managed, and it's not just a matter of writing a report and leaving it with a client to then carry out and hoping for the best. What happens, unfortunately, most people have a day job. A lot of people on this call now will have a day job that interferes with the risk and claim management of their fleet. So what you would then need to do is help them. And then again, this is where the broker and the insurance company in particular can be very, very helpful and guide them through this process. What should hopefully happen then is when you come to renewal in 12 months' time, Phil has not wrote a risk where he's relying on good luck, but good management. And that is where the continuous risk management and claims management, hopefully then the premium, as I said, will look after itself. I don't know if Poonam, you want to add anything to that?
Absolutely agree. I think the one common theme that we tend to see is the synergy between teams when it comes to management. So from health and safety, HR, fleet and insurance, often you see it quite disjointed and one's assuming that the other is covered an aspect of that process when it comes to the driver. So working a lot of the work that we do with our customers is around the synergy between those teams and making sure that you're safeguarding the company, you're safeguarding the drivers, and you're preventing, with the technology that you do have, you haven't just installed it in the hope that it will run itself. And often there's a myth of put a dash cam in and your insurers will give you a 5% discount, but often you don't see that following through in their performance. And I think as the challenges continue in the logistics space with some forms of decarbonisation in whatever route that is, it could be EV, we've got clients who are trialling hydrogen, but it's understanding the vehicles, and the risk has fundamentally changed. If you historically look at ICE vehicles, you didn't fill up an ICE vehicle from your home. You went to a petrol station, whereas you charge a vehicle from your home. And I think we've kind of forgotten that drivers are historically used to driving manual diesel vehicles as opposed to vehicles that go 0 to 60 in 3.6 seconds being the quickest. In a large sort of or a light commercial vehicle. So absolutely agree with you, Steve. It's in regards to how do you actually manage that and how can you showcase that to us? Often we don't get the full story. We'll get some information from the broker. We might get it all, but often I think the best thing you can do is actually ask to meet the underwriter, sit down with an underwriter and showcase your business to help them to understand how does your business operate? Where are you good? We're sometimes being honest about where are the downfalls and where can we step in then as motor risk consultants to support you on that journey, wherever that is. I think honesty is definitely helpful in those situations.
I think just reiterate that. I mean, the presentation is so important. Phil said some presentations from brokers can be quite poor. Phil has an actuarial model to work to, and there's only certain, it will calculate a premium, but you can go below that premium at times, but there needs to be a reason for it. There needs to be a story. If the claims cost and the claims frequency say one thing, well, tell Phil as an underwriter maybe why he should, perhaps not take that as 100% the way it's going to go forward. And working with risk engineers, we can help, create these good processes, but also get that then to translate into evidence that a broker then can share with an insurer. And sometimes, unfortunately, they just don't do it enough, and therefore they're perhaps not getting the best deal that they could possibly. What they're actually doing reflects.
Okay, yeah, I think that probably sums a bit of that culture, doesn't it? That people's viewpoint is, well, I've got my insurance protection, and then it's rated, but actually give them as much information. I suppose when we're looking at our objectives that we're looking at for today, if you look at the fourth one down there about tips for negotiating terms with insurance and brokers, that what you're saying there, Steve, is that we've got to get to understand. Yeah, and I think it's more the fact of not just putting bare minimum that this is numbers of incidents and this is how much it's cost, but actually bringing some sort of story behind that, maybe in terms of, as we speak from an underwriting point, it sounds to me as though don't take this that we want COVID to come back, but from my point, people weren't driving vehicles, so it wasn't costing the fleet insurance. It was costing in other ways. I get that, and but fundamentally, it's about that was a positive strategy, as in people took the vehicles off the road that lowered potentially the insurance risk. So if you're doing things to reduce that with either your insurers, risk engineering teams, or externally, or even in-house, and you've got support mechanisms, it's about shouting about that and telling people. And maybe what Steve you're saying there is maybe that doesn't get across to the underwriter. And I suppose from bringing Phil back into it, is that a real challenge then, that you're not getting the good news stories, you're just getting this is the fleet quote on it?
Sometimes. not always. But, a broker's fleet presentation should tell its own story. But it'll only tell a story if the broker's, fully up to speed with what the customer is doing and, what initiatives they've got in place and what they're planning for the future.
Right. Okay, that's great. And we'll come on with, obviously, when the fleet operators come on, they'll have a viewpoint in terms of some of that as well. So that's really helpful. And actually, looking at the third objective there, telematics. Okay, so I remember a number of years ago the introduction of telematics. I was working for an insurer at the time where telematics was going to be revolutionary and it was going to fundamentally change everything. Okay, and insurers had a very strong appetite to telematics. Probably bring Richard in here, and it'd be great to see from an insurer's point of view what has been the power and what's the benefit of vehicle technology. I'm not just talking about telematics, because we've got cameras, and I know, Steve, you've had some involvement with vehicle technology, camera tech, and telematics as well. And Poonam, you'll have lots of clients that have lots of vehicle technology. I suppose for me, does it work?
If you use it. And I think that's the challenge for most businesses, as we've discussed, it's, Poonam said, around different areas of the business, the fleet manager may have overall responsibility, but the users of that fleet are numerous through different branches and have accountability and responsibility to make sure that those vehicles are driven in a way that is safe and preventative of accidents. So I think it's always one of the challenges of telematics. It's brought in with best intentions, but deployment and usage can often be the difference between it being successful and just being a piece of software sat in the background for most people. I think where telematics really does and is moving into a new phase with AI involved, it has the opportunity to directly help the driver and coach the driver in the moment, rather than waiting for the fleet manager to send out a report on a monthly basis and say that your driving is high risk and we need to amend your behaviours. So an example being that, I guess, from what we know, about 40% of all accidents come from a distracted driver in the vehicle, in the cab. Okay, so the AI cameras that are now there, that are particularly, and that's a challenge for perhaps with unions and things about the inward-facing element of a camera, but the AI capability to give the driver a bit of a warning and say, we've seen some behaviours that are increasing the risk of incident in this vehicle. That's a really powerful thing that's now available and in the marketplace, and does have real impact. It doesn't mean the driving automatically gets reported to the fleet manager. These systems give a warning and give the chance of the driver to self-manage before anything goes and gets escalated. And let's face it, telematics, if used and deployed, I know we've mentioned ethanol, but there's kind of ethanol, which is that first generation of risk. That data is coming out as insight that gives you the warning about actually potentially this driver's heading for a crash before they actually have one and go and bend the metal. I had one last week, and there was a pretty serious incident. And we looked back at the data of the client, and the speeding of that driver for the week preceding the incident was horrendous. And it was plainly obvious that at some point something was going to happen. So that's about the utilization of the telematics information and being deployed. But again, I always like to think about the driver in this as well, because telematics can provide huge amounts of data. In some ways, too much data that it has to be managed. And the driver, as we've already discussed, has a job to do for their organization, whether that's servicing clients or out on the road doing deliveries, whatever that might be. So their ability and capacity to understand some really quite complex and technical aspects is quite difficult. So again, I think we have to think about the driver and the effective change of the driver and simplify it for them. If we say stop speeding, stop turning the corner harshly, it kind of sends a message you are being managed and everything, and a lot of the other things that we may also include then take place. And I think the other aspect of telematics where it's really advanced is actually, to Phil's point, it's about the speed of resolution. So, the minute there is an incident, you can have detailed information from the telematics about what the incident happened, the G-forces that were through it, where it was, time of day, how fast it was traveling, when it was slowing down, speeding up, but also the immediate camera footage pulled again where they've got dash cams deployed that then corroborates whose fault was at it. And I'll give an example. We've got one of our clients who used to have a 80-20 ratio of accepting claims versus challenging claims. And they've completely reversed that because through putting cameras into the vehicles, because automatically becomes immediately obvious where fault lies in some of those incidents. So their claims history is completely changed on the back of deploying technology and using it in the right way.
Okay, great. So there's some real positives, but it sounds then that it's not just like just putting a bit of kit in and leaving it. It's actually enforcing, and I suppose that's a really good opportunity. Really, like we've got so many good ideas that's come through and a good understanding here. As part of the AFP, we do also have some, well, not challenges in the AFP, but within the industry, that lots of fleets are run by people that are not fleet professionals, from that point. So we've got to put that into the mixture as well, that, somebody may well get some use of technology, but got to have that understanding. But bring it's like a comedy act, isn't it? The three fleet managers into the conversation here. Like, what's your what we've heard is some real positive stuff here, but practicalities and experience commentary. What do you agree, disagree? Is it too hard to do profile? To be just interested to find out.
I don't mind going first if you want. So I've probably only been actively involved in the insurance process for about the last 10 years or so, because somebody else always did up until that point. But the lesson I learned is, and it kind of picks up what the insurance guys are saying, is that conversation. No one should be able to, in my view, no one should be able to define or explain the strategies the businesses are taking to manage road risk better than the fleet manager. Bear in mind, we sit on most of the actions and a lot of the responsibilities as well. So to not have the fleet manager in the room, I think is short-sighted. I'm not sure whether other insurers invite the fleet manager or whether the head of insurance would take on that responsibility. But I do think there is real value, and I, from personal experience, and value both ways of being in the room when it comes to in advance of the renewal conversation.
Okay. Lee, James?
Yeah, so I think a bit like Stewart's previous, where he hadn't been involved in the sort of the renewal process. Ours is predominantly handled by our finance team, who, without trying to sound too derogatory, are just interested in the numbers. So, like Stuart was saying, I think our historical way of acting is the finance controller gets involved. They sort out all of the premiums for all of the insurances across the business, without involving the relevant areas of the business, not just fleet, but buildings, etc. We were on a 3-year agreement, so we had targets to hit across the 3 years, purely based on cost of claims. That ends this year. So I mean, this is brilliant for me as a bit of a newbie. So I will be actively reaching out to Pete, our financial controller, and asking him to get me involved alongside himself, the broker, the underwriter now, as everybody, so that we can put together our compelling story of we're here as a business with our claims. These are the bits that we're putting into place. We've got telematics in place. We've got technology that works on an API that informs the driver from our telematics data in real time when they're having events that could lead to incidents in claims. And I think the other bit that possibly hasn't been touched on as much is, it's, for me, the metal can always be fixed. There's a cost of obviously associated to that, but there's a person inside that vehicle, and the human element has no cost to it. That's priceless. And if we can stop anyone having an incident that is going to cost the business money, but ultimately is going to have an impact on an individual and families, etc., That's the most important bit for me. And I think if we get that right, then the insurance premiums as an organic decrease come along as well.
Yeah, I think just to my point, and hopefully you can hear me okay, although my computer is playing up again. It's a lot around engagement, collaboration, and making sure that you've got the right people in the room. So when I'm conducting mine and, going back to the demystifying insurance, it's about getting everybody in the room talking. So, Steve's been involved in meetings that I've had with insurers, with the brokers, with accident management company, with lease codes, etc. But it's all to do with understanding and all working towards the common goal, and that's to reduce risk. It's to work on the areas where there are needs for improvement. And it's not just, the incident, although that's obviously the important part from what kicks it all off. It's the onboarding process. So, with drivers and your policies around that. It's about how you manage an incident and what your process is to it. So your drivers, it's pretty clear with what they need to do, rather than thinking it's weekend, nobody opens till Monday at 9 o'clock and therefore I don't know what to do for the weekend. And creating a provision that supports the operation, the driver, but fundamentally everyone's aware of what needs to be done. And looking for every single part where you can work on the efficiencies of that incident process and your communication and your reporting with the insurance company. And the insurance company's got a part to play with that as well, from the claims process, how quickly they jump on that and they work with third-party intervention to keep your costs to a minimum, get rid of the credit hires, which obviously Paul's mentioned, being the bad guys in all this, because they're the ones who are profiteering more than most, and making sure you can streamline as much of that as possible to minimize the impact on your business. So, it's looking for all those areas. It's working in collaboration, in conjunction with your supply chain, your accident management companies, etc. So you can make it as cost effective as possible for your operation, but also identifies and helps reduce the risk and your average cost of claims, because obviously the longer that's kept open, potentially increasing cost that is, which goes against your premium and your loss ratios. So, these are all areas you'd be looking at in terms of what you can do to manage your risk going forward.
Okay, and I think it looks to me as though James I think he's put his hand up, so you might be in agreement or challenging something that you said there, Lee, maybe.
Probably.
No, it is in agreement. It's one of my frustrations as a fleet operator is we have policies written, and almost all of our policies use the word may result in, and that gives a little bit of leeway where, for example, I send out one of the less effective speeding reports every week, and within that it says the policy states that you agree not to speed within your working day in a company vehicle. Failure to adhere with this may result in disciplinary action. Now, the word may gives someone a bit of leeway, and I think it's great to have policies in place, but if you don't ever enforce them, they kind of become pointless. So
just to that point though, James, the may is because, as you know, each element has to be investigated. So putting you will be doesn't always be the case. So may is to allow the opportunity for you to review, investigate, and come out with an outcome with your health and safety, your telematics information, making sure that's right. We've seen with, false positives, etc. So you're right, the wording needs to be correct, and it's in the action of the policy and making sure you're acting promptly and addressing those issues so people don't. There's no point in writing a policy and not doing anything about it. That's the issue.
Yeah, definitely.
I was going to say there, from my point, I always like to be a little bit controversial, but it's also realistic as well. But do we have expectations of drivers without actually helping them? What I mean by that is the world is very full of policies, compliance, for obviously right reasons. But do we tend to get the viewpoint that some organisations get it really well, some not quite so well in terms of effectively communicating what you're actually trying to do. So coming back to where James was saying about may or may not, etc., it's about explaining and giving that understanding. And I just wonder whether one of the issues is that fleet is generally second or third largest cost to a business, and yet we're putting people into the hands of insurers, take this in the right way, in terms of huge cost, okay, huge cost, and yet we're relying on the strength of a policy that says may or may not. And I'm just thinking from a driver, and hand on heart, all operations probably should think, do we do enough with our drivers to help them to understand what we're trying to achieve? And that's just probably just to widen that up to everybody on the call. And coming back from an underwriting point, if you can see that that policy is effectively embedded rather than just effectively written and issued to people, that's a different phrase, isn't it, really? That we've got a policy, but actually we've got a policy that all our people live and breathe against, but those that don't are held accountable. Yeah, so I think it's an interesting viewpoint that there's a lot of good stuff, but I think it ultimately it's reliant on one person, and that one person is the driver, and they're the one that influences everything that we're all trying to achieve, isn't it? And I just posed the question that we from the part of the AFP we do about how many people does it manage vehicle fleets, etc., and actually disparity sometimes of, do we put enough focus on engagement and experience with drivers? So just that probably quite a good way of finishing a conversation before we go on to some questions that have come through on the chat.
I'm going to be rude and just skip across Richard, seeing how he's got his hand up, but it's about management, driver management, fleet management, risk management. So all your policies, and making sure you've got effective management of those policies. If you don't manage them, then obviously it's going to have uncertainty in things not being done. So you've got to drive it, and it's got to be driven bottom up, top down. You know, drivers need to understand it. Managers need what they need to do. It needs to be supported by the business in terms of what things that you're going to tackle. Your strategy needs to be effective, and your policies in line with your strategy. You know, it's making sure you get all those things together so you can actually make it showing the improvements and measuring the improvements. But you've got to be consistent in your approach. If you start kind of weighing from those elements and ignoring them or not delivering them yourselves, then they're going to fail.
Perfect.
Sorry, Richard.
Yeah, come on, Richard. You got your hand up. As long as it's not that long, because we are conscious of time.
It's very much linked. It's very much linked to what Lee was saying. One of the things we quite often see actually the conflict within businesses themselves about. So it's not just about getting the different elements of, like Lee's codes that around the table. We quite often see that the fleet manager wants the safety aspects, but the ops team is going to the driver. You need to deliver that in 30 minutes, and therefore imposing almost a driver behaviour into how they operate. So I think a key part as well is an agreement within the business that the priority is safety, and we want our drivers to drive within the law and in a safe manner. Sometimes there's conflict in that.
Oh, that's great. Thank you. Listen, look, I think from an objectives, before we open it up to questions, really, as I say, I knew it would be quite an engaging subject, and I think there's a lot more continuation of that subject as well. But if we look at what we're looking at from our objectives there about understanding driving and the increase in premiums, I think we get a handle of those of us on the webinar here much better from an insurer and from a broker point of view, that what, you know, the increase in the premiums and the challenges that those companies have, where we're assessing the risk and the need for assessing it and influencing positivity. The telematics aspect, that's great. And I think that one of the key things, and although it was on the bottom there, it was that thing about negotiating better terms. Just tell people the good stuff and get that engagement, and maybe starts from within your own business, probably the stakeholder engagement within your own business, but then cascading that through to your insurance broker, to your insurance provider. And it'd be great, wouldn't it, to be in a situation that every client, every insurer wants to fall over themselves to insure you, rather than the we don't really want to, so it brings that competitive nature between it. Look, I'm conscious, I'm sorry, I should have said right at the beginning that sometimes it's not always the view of the company, it's of the individual. So whatever, anyway, I know I should have said that right at the beginning, Lee, but it's about an open and honest AFP conversation, and I've been really grateful for the extent of the openness that's there. But I have seen a few questions coming through the chat, and I think we got James on the call as well. That's probably been looking at some of those. So, James,
yeah, I'm here.
Is there any? Good. Hi, James. Is there any? Sounds like the Eurovision Song Contest result coming in, but we got.
Yeah, the results
James.
have been coming in, and I was going to say I'd recommend people look through the chat actually, because there's been some fleet operators that have shared some of their insight and solutions that I think are quite useful. So recommend anyone on the call do that. I think also, because of time, Peter, that what I've done is summarised the questions that have been raised today, because we won't get through all of them. I think it'd be better that the panel writes the answers to some of these questions, and then we post those back to people that were on the call today as well, because we're not going to get through them all, basically. So but the first question is to the panel is, how can we align accountability for fleet vehicle incidents with personal driver behaviour, especially when drivers don't perceive fleet accidents as impacting their own insurance? And what strategies can help improve incident reporting when drivers may avoid doing so for fear of personal consequences? So that's a long question, but it's about driver accountability, really. Anyone want to go at that one?
I'll try and address some of that. In respect of not reporting claims to their own insurer, I think technically, and I think this was mentioned on the questions, when you are renewing your own insurance, you are asked, have you had any incidents in the last 3-5 years, whatever it may be? They don't say in your own personal car, they just say in general. So technically, you are meant to report that. And I think if fleet operators wanted to let their drivers know that, then it may focus their attention on it. Doesn't mean that they will report it, but at least it may make them think. As far as the getting people to report claims in the first place, unfortunately, there's quite often sticking carrots. There sometimes has to be consequences, and it doesn't apply to everyone. But sometimes you can say to people, if you don't report a claim within 24 hours, whatever it may be, there will be consequences. But likewise, if you do, we can reduce those consequences. You'll in effect be looked on in a kinder light than if you don't. It's very, very difficult, and I appreciate that all fleets operate differently and they have different relationships with the drivers. But this is where it's best to work with your fleet risk managers from the insurance companies to come up with a solution that's best suited to yourselves.
Great. Thanks for that, Steve. Next question. It seems insurers are inflating repair and write-off costs, possibly to justify higher premiums. I had £700 repair quote quoted, but the insurer paid over £2,000 for the same work, and another vehicle was written off for minor damage. How can we ensure greater transparency and fairness in repair valuations and insurer decisions?
That's a good one.
Not aware of any insurance company that would want to inflate a claim. Doesn't seem logical to me. I mean, a lot of insurers would use their own approved network, so they should be getting efficiencies in the settling a claim, not paying more.
I think that's the misconception with regards to the whole process. So we got an incident goes into a network of providers. We're getting estimated costs through whatever order text or whatever solutions being used, and then basically it's how those are being assessed, and people be more diligent and be more thorough in each of those processes. But there is a challenge, there always an opportunity, and someone to also benchmark against what those repair costs. I guess until an incident is actually evaluated properly, and you defending the repair network here, but until you start taking the parts apart, then you can't really understand the full damage effect and obviously the impact on costs. in addition to that, it's obviously to do with your vehicle choices as well. You know, some manufacturers are struggling with parts, and that is going to have an impact on the overall cost. So you've got to think about this more holistically in relation to your vehicle selection process and the incidents that you're having, and then the downtime potential that you've got on your fleet. So that's also going to be a consideration when you've got the repair costs, and probably hence why insurers, and I'm probably, Paul, happy to be corrected here, that when you've got a vehicle and we're waiting 12, 18 months for a part, and you've got parts against, and then there is a thought that an insurer will write off because it's going to cost too much for it to be sat there doing nothing, and therefore, you know, there is an opportunity to write that vehicle off, because then you're passing that problem on to the end user because they've got to find another vehicle. So, you know, that's another area of maybe a misconception or an element that needs demystifying.
Stuart?
Yeah, I was just going to pick up the same kind of point I made at the conference in May, which is everything at the direction of travel, and we talked about the specifications now and all the extra sensors, etc., etc. So we're making these vehicles as safe to drive as we can. Yeah, if somebody else hits them, our sustainable EV vehicle, for example, then becomes unsustainable, because very quickly you get to a point where it's uneconomical to repair and it turns into scrap. That's non-sustainable. So I suppose the question is, from the insurance perspective, is how flexible. It always used to be a fixed percentage of the pre-accident value is, and then picking up Lee's point, is if that's, you know, a specialist vehicle and I have to wait a year, 2 years to get another one, it's okay to go to 80% of the pre-accident value, because actually it's a better whole life cost solution. Yeah. So I think if we don't change and we don't adapt, we're just going to shoot ourselves in the foot, because all our new EV vehicles will just be on a scrap heap.
How are we doing, Peter, for time?
Yeah, I think, as I say, I always knew. I mean, we've had a fantastic response to the webinar, okay, and I think we need to continue this within the AFP. So, you know, focal on an insurance and risk angle as well. So we'll be talking a little bit more about that. Before I thank the panel, and obviously I want to thank the panel, just a couple of things, just to, as a sort of a conscious of time, but just to sort of wrap up really. Just a reminder to members that are either online or listening to the recording of the webinar. We have our AFP Expo on the 10th of September. It's at the British Motor Museum in Gaydon this time, so it'd be great to see as many of you as possible there. It's an ever-growing expo, so it's almost one not to be missed. Yeah, Fleet and Mobility Live. We will have a stand there at Fleet and Mobility Live on the 7th of October. We have a fleet operators dinner on the evening between Fleet and Mobility of the 2 days on the 7th, and obviously operators will be invited. So, you know, this is your organisation, so, you know, there's real sort of appetite to get involved, and I think the involvement today has been fantastic. I've got Fleet Vehicle Management Foundation course that starts on the 23rd and 24th of September. A really good course, that I would say that, because I'm one of the trainers on it, but it really is there focusing fleet administrators or people that don't believe they have a fleet role in a business, and it demystifies the fleet industry really from that point. So perhaps we change that. Your Voice in Fleet, 15th and 16th of October in Tamworth. So, you know, that's the link there. Is there any? It's like the adverts here now, isn't it? Like, it's like before we go back to the game show. But is there any other things that we need to come across? Oh, there we go. Look, here we go. Coming soon. Results of our fleet benchmark survey. They are now live in the members area. I had a look at that yesterday. It's quite interesting to see how many people does it take to manage a vehicle fleet. So we'll expand up on that area, but it's a great in-depth survey that's happened there. New board members, we welcome new to the board at AFP, Matt Neal and Aaron Powell as new board members. Final testing stages of the members app. I do hear on our 2 weekly calls from a board point that there's some frustration about the app and when's it coming, but my understanding is it's in final stages. So I don't know the timeline there, James, of what a final stage means, but it's on the home straight, so we're getting there. Shared charging. If anyone's interested in their depot office and offering that charging to members. There's some details on there of what we're looking at. We're looking to set up that procedure for sharing of charging infrastructure. So please get in touch with the admin team. And save the date. As I say, Expo 10th of September. It'd be great to see so many people there. I'm thinking we might look at something along the lines of insurance and risk on that day, from the appetite and the conversations that we had today. Listen, it's been a great webinar from my perspective. I'd like to thank everybody. I'd like to thank Phil and Steve from Zurich, Poonam from AXA XL. I did get that right because there are two AXAs. There's AXA GI and AXA XL. Richard Parker from Webfleet, James from Miele, Lee from NG Bailey, Stewart from Sureserve. Thanks to James in the background for fielding some of those questions, and we will, as an organisation, come back to you with the answers as best as we can get those answers. But I think sometimes some of those examples can be, we've got to understand a little bit more that people feel that the insurers get different rates to what the Joe public gets, but sometimes I think it's the power and the strength of insurers that actually they probably get more competitive rates. So so just to put that to bed, and just to get some understanding of that. And Carolina for hosting and making sure that the slides come up in the right format. Have a great day. Make sure that your drivers engage. Make sure that they keep those insurance premiums at a lower point. I think we'll tackle separately where lots of fleets are moving towards a self-insurance model. Now, when we talk about self-insurance, I think it's more about taking more of the deductible, so that comes off your bottom line rather than the insurer's bottom line. But ultimately, we're still looking at a cost, and I think we need to look at a separate subject on that in terms of the pitfalls of self-insuring. I always said it's one of the largest costs to a fleet. It could be even more of a cost to your fleet, and it's about engagement with people. So maybe we'll run a separate webinar specifically on the pitfalls or the benefits or the negatives in terms of self-insurance, not forgetting that you've got a legal liability for unlimited damage that you could cause. And I'd leave you with, I always look on a positive side, but I'm going to leave you on a negative side. That some of the claims that I see from the claims industry are massive from motor fleet and where it goes wrong, and I think one of them on a motor, I don't know the specific details, but I think within the industry it was sitting on an injury to one individual sitting at around about 70 to 80 million in terms of cost. So when we look, and from Phil's perspective there, that it's not mine, is it? But the reality is there that we do take insurers for granted, but actually there's an actual reason why they're there. And completely different tangent for those of you that are still here as well, and on insurance and cyber risk, no one really thought that cyber was an issue, until Marks and Spencer's a number of weeks ago had a massive cyber attack, estimated cost in the region of £3 million. One insurer has taken a huge hit payout potential on that, and that could affect the stability of that company. So we can't hide away from the fact that we're looking at some big numbers, and there's some big responsibility from insurers. So work together, not against. And I would say right at the final part here, rating a motor fleet insurance is different to your own private car insurance. So time and time again, people get that, well, my insurance isn't different, mine's different. And maybe we'll get another subject there for Phil at some point, but there's different ways of looking at it. Fleet is separate to your private car. I think I've dried up now, you'll be pleased to know, but thank you very much to everybody joining us today, and most importantly for the panel members as well. And have a good, fun rest of the day. Take care.